What's going on, YouTube? Today I wanted to talk a little bit more about the bankruptcy rate in California. The other day I posted a video talking about how many bankruptcies were filed last year in California alone. It was something like 36 or 38,000 bankruptcies filed in California alone. And that is by far the most in the United States by a long shot. So with that being said, I did a little bit more research into it, and I found an article from the Financial Times, and I want to quote it. It says, U.S. corporate bankruptcies hit 14-year high as interest rates take their toll. 14 years ago, was just after the GFC. So we have just as many corporate bankruptcies today as what we did back then. But the economy is doing so good. And at the end of the quote, it says, as interest rates take their toll. Have we just started to see and feel the effects of interest rate hikes? I think we've been feeling it for a little bit. I don't think we've felt the full effects yet. And, obviously we're seeing it, 38,000 bankruptcies filed last year alone. That's pretty heavy. And, that's a 14-year high. That's the highest level since 2011. That's unbelievable. So, and that, we're talking about interest rates. This is all really induced by interest rates, right? And with bankruptcies, you're going to see automotive loan defaults. You're going to see, business loan defaults, credit card defaults, mortgage defaults, commercial real estate defaults, all different types, associated with these bankruptcies. And it's all really comes down to interest rates, right? So that's coming up next. January 29th, there's another Federal Reserve meeting, and they're going to determine whether or not they should cut rates, pause, or raise potentially. I don't think they're going to raise rates. I think they know that the economy is slowing down a little bit more than they'd like to say. They just, hide behind the shadow of, the economy's doing pretty good right now. Inflation's coming down. The job market's doing really good. We added 200 and something thousand jobs to the economy. And then 3 months later, they revise it. Ooh, 200,000? Ooh, our bad, bro. There was only 12,000 jobs added. Every time they come up with the BLS number, they revise the numbers. The jobs report. Oh, we added 700,000 jobs to the economy. The economy's doing great. Inflation's coming down. And then all of a sudden, 3 months later, they revise. They do 700,000 negative revision. It's unbelievable. It's like, they're so foolish. They're so full of it. It's unbelievable. So anyways, and it's all really comes down to interest rates. Interest rates are the lifeblood of the economy. When interest rates are high, nobody's borrowing and nobody's, getting business loans and automotive loans and, stuff like that. So we are starting to see the effects of these interest rate hikes, I believe, and we're seeing it in the bankruptcy rate, So, that brings me to my next topic, the banking system. The banking system. When you think about everything that's going on in Los Angeles right now with the banking system, with the fires, all of these people purchased houses over the last couple of years. And if they didn't purchase, they definitely refinanced, when interest rates were lower, and they probably pulled out a bunch of equity. So they refinanced their house, got a lower rate, and we pulled out a couple $100,000. We've got a new Beamer, got a new Rolly. Life is good right now. I wonder if their life's doing so. It's just everything changed like that, I feel bad for these kids in Los Angeles over these last couple of years. 2021, 2022, these kids were bidding up houses like, oh, you want $1 million? You want $2 million for your house? I'm going to give you $200,000 extra. Those days are gone, bro. Those days are gone. And all of these kids overbid on houses, and now look, one fire just wiped these kids out straight up. And it all comes down to the banking system. It's not the kid. It's not Jimmy or Johnny who's really losing, who's going to go bankrupt. They're going to go bankrupt, and they're going to lose everything, all of their clothes and all of their photos and all of their, gold and whatever, their cars. Yeah, that's all gone. All of it's gone. But the people who are really holding the bag, it's the banks. the banks. The banks have a piece of paper saying Jimmy owes us $2 million. And now all we have is a piece of land with a bunch of rubble on it. And that land's worth something, but it ain't worth $2 million. I'll tell you that right now. I guess only time will tell what that land is really worth. You know, as we start to see more and more bankruptcies and more foreclosures. You know, so I thought about the banking system, and I did a little bit of research into the banking system, and apparently the banking system is sitting on $500 billion as of right now, $500 billion worth of unrealized losses. That's the same amount as they were sitting on back in 2008. They're sitting on just as many unrealized losses today than they were back in 2008 and 2009. And we haven't even seen what's going to happen with all of these unrealized losses that they're going to have to realize in Los Angeles County. They gave all millions of dollars to kids, you know, blindly during, you know, COVID. Everyone gets a loan. You get a loan, you get a loan, you get a loan. Unbelievable. And unfortunately, you and I are going to be the ones to bail out the banking system yet again. You and I are going to be the ones to bail out the insurance companies yet again, because that is a very likely scenario. Insurance companies go bankrupt, just like AIG did back in 2008 when they were investing in mortgage-backed securities. Lehman Brothers, they went belly up. We had to bail them out. Well, actually, we didn't bail them out, but we bailed out AIG. That's for sure. And these banking systems now, the banking sector, they give all these loans to people, and now they're going to have, when are they going to realize these losses? You know, all of these families, I feel terrible for them, but most of them will lose everything, and a lot of them will file bankruptcy because they're not going to continue making a payment on a house that's not there. It's just not. The best thing that they can do is file BK, wrap this up, give it 7 years, and start over. Because, you know, these insurance companies aren't going to pay. They're not. Some people will, but I promise you these insurance companies are going to do whatever they can to come up with some bogus excuse as to why the homeowner wasn't in compliance with their fire protection policies and some BS. A lot of people are going to lose it. And at the end of the day, it really comes down to the banks. The banks are the ones holding the bag. They really are. So we'll see what happens. You know, these next couple of years, 5 years in particular in Los Angeles County are going to be unbelievable. We will see. So, you know, I wanted to give my thoughts on that. And it's such a shame because being a native Californian my whole life, you know, Donald Trump was getting elected, and I was starting to have a little bit of optimism. You know, I was hoping, oh man, this guy's going to come in. He's talking about cutting taxes again. He's talking about cutting taxes on overtime, taxes on tips, cutting the corporate tax rate. Like, man, things could take off here. Things could get really good. It's funny how the optimism like that just changed. Not too many people optimistic about the economy anymore, especially in California. So we'll see what happens. I just wanted to talk a little bit about that today because it was on my mind. So that's it. If you have any questions or comments, I'd love to hear about your thoughts, some of your thoughts in regards to the, you know, economy and interest rates and banking sector, whatever. I love this stuff. I could talk about it all day long. It's very fascinating to me. So until then, I'll see you next time, guys. Talk to you later.